Good morning. I'm Pete Molman. It's Forex Focus, and we have somebody new joining us today, Mike Henley, or as we like to call him, Twitter Mike. How are you, my friend?
I'm doing great. Got here in 25 minutes today, so.
You see, the magic of coming down at 4 a.m. I know, it's 14 minutes down for me, 2 hours home every night. So, yeah, it's spectacular. We're turning everyone into creatures of the night. So, very good. All right, first time. Mike is one of the members of the team at tastyfx. He is, well, you're responsible for so many things, but Mike is somebody who is one of the people who, when you go at Tasty Trade and activate your account, what makes that so elegant, quick, and efficient, Mike is driving that ship in a very incredible way. So, Mike, you're a passionate trader. You're passionate about everything, and it's one of the great things we love about you. So, we're going to talk a little bit about markets, but just from I was listening to the sports coming in. It seems like the Pacers have this thing all set. I mean, what are your thoughts on this?
I think we're waiting to see what Halliburton's strain comes back with, what grade it is. He has, I want to say it's the right leg. He has some tightness in that leg, so it really depends on that. I don't know. I'm 48 minutes away from an NBA championship, and I feel like I'm 12 years old again. So Thursday is a huge day for me. Yeah, for the Thunder itself, I want to send them home in Indiana. I don't care if we're not at home. I want to send them home right away in 6. So sorry to the Indiana fans out there, but we're rooting for OKC. Childhood dream coming true right now. So
look at you, passionate about that.
Yeah.
All right, we've got a lot going on overnight. We saw a rally in equities, rally in bonds. That's getting cut into pretty hard, starting about right when London rolled in about 1 o'clock, and we're actually seeing some softness come through in FX markets. Now, Mike, you are you're an active trader. You trade a lot of things, and just getting a sense of. We've got the FOMC coming up at 1 o'clock our time. The announcement 1:30, the press conference. I think it's a given that they're not going to change rates this meeting. What will be interesting is the statement that comes out of one. So you get like a dual binary event. You get the market will move at 1 off the statement. Any changes to wording, don't read the statement. The market will read it very efficiently for you. At 1:30, then Powell comes out and talks about, and everyone will be looking, chums in the water. Is he going to take a bite and respond to the rates should be dramatically lower statement? My guess is he says nothing. What do you think?
I really agree with that. I would say the Fed's kind of sidelined in a way, and they have been for quite some time when you haven't seen them do much with open market operations this year. They haven't cut in 6+ months, right? So again, we're sitting at pretty much full employment right now. Sure, we've seen some tick up in jobless claims, and the unemployment rate itself is holding steady for the most part. Yeah, we see some softness in the full-time jobs and part-time jobs increasing, but that's really what Powell and the Fed are focused on. I want to say for the most part is that unemployment rate. Are we seeing cracks? Maybe. We're seeing some softness in the data, sure, and we do have jobless claims actually this morning, so that should be interesting. Kind of the question for me is
well, you say that. Yeah. Why is it interesting? It's a backward-looking number that constantly gets changed.
Sure. I want to say it's interesting because of the fact that so many people look at it itself, that data point kind of makes it interesting itself because of the attention that it brings. Yes, pretty much most of the time it's going to get revised down, up, sideways, one way or the other.
No, from an active trader standpoint, you hit on it exactly. I don't care what the number says. I just care what it does to the market. If the market pays attention to it, I'm not going to say they're stupid for doing it. I'm going to take that as an opportunity to find trade location. So you're spot on, and that's exactly the way a trader should think about that. I mean, you go through this stuff. Mortgage applications, nobody cares. Building permits, even less cares. Housing starts, interesting. That in a different time was a number that moved the markets. Absolutely no interest there. So it's initial claims. Again, looking at are there cracks in the employment picture? Doesn't seem to be.
And that's what this chart kind of shows when we expand on the data piece itself is we're seeing that regular tick up we kind of saw last year around this time. So is it seasonality? Is this just normal market conditions where all those holiday workers from Q4 are starting to go back, enjoy their summer? Or is this the start of something new?
Do you care?
That's the thing. That's why I think Powell is wait and see right now, right? Because it can go one way or the other. It's kind of like a chart at a support or resistance zone, right? Where you're waiting for it to play out. You don't know which way it's going to go or not. And that's kind of when I listen to Powell's notes, when I read the press conference, I know you don't.
Wow.
Don't
Okay.
read it, but I'm reading.
Hold on. I'm taking the Kool-Aid away from you. No more Kool-Aid for you.
So when I'm looking at stuff like that, I really don't hear, throughout 2022, you really saw a sense of urgency in what they were doing with inflation, raising rates over and over to get past that. And then I see a really dramatic shift in tone just this past 6 months, even from 2024. Again, the language is really soft. He just repeats himself over and over with, we're waiting to see how the data plays out. Tariffs historically can cause inflation based on the data we've assessed, right? But now we're waiting to see. Again, it's waiting to see how inflation looks. That's been soft for the most part. Is that just a kind of side effect from the tariffs we've seen and all the front running on imports we saw, and then it's pulled back a little bit? Yesterday we had retail sales that came in pretty soft. So is that just some normal, we got really scared because of tariffs, everyone started stacking their chips? Or is this, hey, maybe there's something there, maybe prices will exponentially increase here? Because not only do we have this tariff situation out, now we have, is this the start of a big war in the Middle East? Since last Thursday, we've had crazy escalation, I would say, in rhetoric, and it continues to escalate day after day as well. So
Yeah, but explain this to me then. Why is, and again, guys, this is a pair we don't focus on a lot, but with 80 plus FX pairs, this is kind of cool. Why did I? No, let me get this. There we go. Israeli shekel. Now you're talking about, okay, how can we trade? How can we trade the war? Please don't take that as a morose statement, because it's tragic on both sides. You saw the shekel. Actually, this is dollar shekel, so the chart going up means the dollar is gaining against the Israeli shekel. All that was taken back out in a relatively short amount of time. So this is basically saying that, to me, as bad as the conflict is, it's relatively contained at the moment. Now, this is a market that's a little bit wide, but one of the things you get with the new product set like FX is the ability to look at, if you think about you can look at Palantir, and I know you have a strong opinion about Palantir. Looking at Grimace, but Palantir at all new highs. It's viewed as, again, if there's going to be more fighting, this is something that's interesting from a standpoint. One way to look at it, playing the currency pair is another way to look at it. But bigger picture for us looking at, and here might get us back to the full. Thanks. Page. So, and let's get down to, there we go. So we saw right around 10 o'clock our time, midnight, very early end of Asia, start of London, some dollar strength, which meant euro weakness. When you saw SPOOs down, bonds moving, what would your thoughts be as to currency reactions here, and because it's kind of a mixed bag. We're seeing things like flight to quality plays, dollar Swiss, plumbing new lows, almost plumbing new lows, coming back a little bit on that, but that that 80-cent level, which they've been pegged to for a long time, seems like it's getting close to giving way. Swiss often considered a flight to quality play, safe haven play. Now the Swiss are having a central bank meeting tomorrow where they're going to take interest rates. Prediction is they're going to lower them back to zero. And you think, oh, zero, it's really low. Well, in the height of the financial crisis, Swiss rates were actually negative 2.5%. So are they as low as they have been? No, but zero is low. What are your thoughts that FX markets are great efficient indicators? For me, much more so than looking at an economic stat. Swiss awfully weak. The dollar is gaining a little bit of dollar Swiss weak, which means the Swiss is strong here. The dollar in other pairs like Euro, Aussie, Canada, Euro, dollar a little bit stronger. What do you make of? What does that tell you as you go into a setup day like today? You've got a Fed announcement, so conventional thinking is, well, everything just stays in the range until they announce. I'd say 75% of the time that's the case. The other 25%, the markets are reacting to other things and don't have the patience to wait. What are your thoughts when you go into a day like today?
It's interesting. Do we see just a bunch of mean reversion, right? Data drops 5 seconds, there's a huge move, market immediately mean reverts, or do we see maybe a change in direction? Or do we see this dollar strength continue to progress? Does Powell come out super hawkish? And he says that not only do we have tariff risks now on the plate, not only do we have softness in the employment market data, but now we have this war looming that will also add to the inflationary pressures that we're seeing from tariffs. Is this just an inside day where Powell comes out with the spiel he's been saying for the past couple months where, again, we haven't seen enough data? Not the most exciting thing to see, but maybe he has a change in heart. Maybe there's been some dramatic shift. Again, the data itself hasn't shown any craziness. I think everything's been in line with expectations for the most part. So maybe, again, if there's some drastic change in rhetoric, maybe we can get some big movement today. But if it's the same spiel, maybe it's just a little pop in the market's pricing in those comments, and then we see some mean reversion again. Because historically we see that a lot with Fed announcements,
right,
where a huge pop one way. By the time he gets on the mic and starts speaking to the public, moves already made and it's priced in. Do we see that today, or is there some dramatic shift?
Yeah.
That's kind of what I'm looking at.
Okay. And, we'll see equities respond to this, bonds respond to it. Currencies will respond to it. It's a little bit, sometimes it's interesting. I'm really interested because let's not kid ourselves. We're off the 116 highs. We're 100 pips lower. We're wrapped right around 115. By any measurement, 115 is still awfully rich, considering we spent the better part of a year between 103 and 106. If this is the best they can do in terms of a pullback, it's not much of a pullback. Again, a low put in that's slightly below the previous low, this low right here, right below this, but we're still seeing the semblance of higher highs and higher lows. Higher high, higher low than the previous low. Same thing here, same thing progressing for here. Little bit of a change here in terms of us marking out some. How much credibility you put into, well, are we real? I think 160, again, currencies move on average over the last 30 years, about 2.2% a year. Now we've moved 11% in 6 months. Does that mean that we are going to go back to 105? No, we have anyone looking for that move. You can have that opinion and you're going to have to give yourself a fair amount of rope to maintain that. I think realistically here is the idea of, is this 116 as far as we go? Because I think it's fascinating. You talk about safe haven flows and gold is up, crypto's up. traditionally we would have seen after printing 116, I would have thought Friday with the start of the conflict, Thursday, Friday, we would have seen 113 because they would have basically challenged everybody who's long euros. Do you really want to still be long? And we couldn't do that much damage to the market. So it's hard for me to be bullish up here. I'm not a momentum guy. I don't look for the next, we're going to 120 print, but it's hard for me to get excited about being short because the market can take a lot of news, and it's really what it does with it, not what it's going to do with it, but what it does with it. So dollar yen, we saw dollar Swiss plumbing its lows. Dollar yen, not so much. A relatively constrained story. Now they're at 50 basis points. BOJ meeting Tuesday, no inclination to change rates or change any of the mechanics of what they're doing. We're not seeing dollar yen back at 140 again, which is really where Swiss is in terms of structure. Carry trade still plays here. It's actually a better carry trade in Swiss right now than there is in yen. So when you look, one of the great things, you want choices to trade. Now, you've got lots of choices in FX. You go back and trade, equities or futures, crypto. Which pairs are most interesting to you given the potential for movement around the binary event and where they are in extremes? You would think if it was a true flight to quality play, you would have seen, again, bonds higher, the dollar stronger, except for what they call safe haven currencies, which is yen and Swiss. Yen not biting, Swiss biting a little bit more. Does that mean the yen should be falling more or that the Swiss is cheap right now? And again, I want to be mindful of asking you too many opinion questions, but what I want to do is get a sense of, okay, how do you process all this stuff and how do you walk through it? Because you are passionate about trading, you're fascinated by the challenge and the exercise, and I love that. We do a mock trading challenge at tastyfx, and everyone looks forward to when you're up on the wheel to do it. So breaking down opportunity here, where's your focus going into this?
Yeah, and I pulled up a lot of daily charts here, just looking at all the pairs, and we can look at USD JPY first. And again, you look at really any dollar cross pair with another major currency, and you put a peak for the dollar anywhere. It's the same time Trump got elected, and most of the part it's in between days of that inauguration, which is interesting for the dollar peaking. So since then, we've been in a complete downtrend for the dollar. And are we at extremes for USD JPY right now? Yes. Looking back on this daily chart here, going back to all the way of 2022, we're at those levels there, and then we're in a little bit above that 140 support at 144.
Which has been rock solid. Yeah.
So I haven't really seen too much craziness out of Japan. It seems like their central bank has just been on pace with raising rates occasionally, and that's been it for the most part. Is the carry trade unwind still there and still in play? Maybe so, to the degree it was last August. Maybe not, where everybody's over-levered.
Where we saw this move from 162 down, straight down to, pretty much straight down to,
because you can compare those moves and ranges there, right? And we look at this move from July to August. That's a much more violent move than we see Trump getting elected till today, right? So I want to say there's some little bit more control and sense of direction. That move in August, was it panic? Kind of looks like it on the chart to me, right? Compared to this, where it's controlled trend itself, and you can kind of look at it from this past 6 months. It's been a bunch of chop in that downtrend all the way back to 140, and now we're seeing some bounce. So do we stay in this range of 140 to 160 for a couple of years where we're bouncing back and forth? Or again, is there some dramatic shift where either the Japanese economy cleans it up, that currency really becomes that safe haven, and the dollar continues to devalue, right, and drop way below 140? Is that a possibility? or do we just see a bunch of chop here in that zone where nothing really changes on the USD side or the Japanese yen side of things? And I think that's interesting. Are we at an inflection point here? I'm going to sound like Powell, and I'm in that wait and see mode right now, right? Because that's what the data is telling you, right?
So, but you just hit on a great fact that, and honestly, I spent the first 15 years of my career on the trading floor and then moved off and to screen-based trading. And one of the hardest things for someone who were in the pit, you were always, your job was to show a bid and offer, irrespective of if you had an opinion. You had to provide liquidity. The hardest thing sometimes is to do nothing. And it's like, I'm not doing my job because I don't have stuff on. There is a measured, you want to be, again, engagement just because if I'm looking at it, I should have something on, is something you need to guard against. And I think you have a good discipline around, I want to see what happens and then make a decision. I think that's great. And I think everybody should feel that you're not failing and being a good trader by not having a lot of stuff on. You don't always have to express an opinion. From everything you've digested, and you read the Fed announcement, which again I find very troubling, and maybe I need to give you more work to do. But Mike actually works around the clock. He is truly incredible.
That's an after hours.
Yeah, I got you. Out of all the pairs we picked up, and we can look at the commodity currencies, which have given back a little bit more ground. Tariff seems nobody's reached an agreement on tariffs. The UK is the closest. The Japanese said leaving G7. By the way, we don't have an agreement in place. Nobody cares. How do you compartmentalize that back into your trading decisions? Because we all cared a month ago, and we swung on every freaking tweet.
Yeah, I think that's kind of new to all of us, right? Because the last time we've seen tariff increases of this size is over close to 100 years ago in the 1920s. So anyone alive today telling you which way the market's going on tariffs, what tariffs are going to be set where. Again, where are they basing their opinion is my question. How are they getting this right? Because we look past, you have to go 100 plus years ago to find a historical example of something of this happening. So that's kind of how I look at it. And I think it gives you, right, we've seen volatility tick up massively the past 6 months.
Yeah, 22 is the new norm, and I think everybody is numb to that, and that's a great call because we spent 3 years with vol between 10 and 14%. Vol is staying elevated, and it seems the market is relatively. If you were pick 3 things you want to follow at 1 o'clock, what are they? And they don't have to be FX. I'll let you off the hook.
Yeah, one is the most important is what Powell is saying.
Product, because what he says is what he says.
Probably I'm going to look at Aussie because, again, we're looking at this 15-minute chart here and past whole week, again, since this craziness kind of started last Thursday night, right? We've been in this
contained shop, relatively contained shop, and I think that's a good call because if the spring does wind and it busts out, either direction, I'm actually indifferent to whether or not it prints above 65.5 or below 64.70 to see what legs it has on the downward, because this one is spun so tight. What else?
That Aussie is the biggest one, right? Because of how I've seen this range from 64.70 all the way to 65.40. There, something as well is big commodity currency, right? With oil on USD CAD. We look at that daily again. We see it peaking kind of toward, this was craziness of...
that was tariff stuff.
Yep.
And again, that was the call from, I think, Goldman Sachs was, if these tariffs aren't resolved in 30 days, we're trading $170 Canada. That's where you compartmentalize that. Obviously, the markets took it otherwise. So we haven't talked a lot about Canada, and it's been relatively muted. This will be an interesting one to see if... Now, here we got a little bit of dollar bounce to it. So
that's kind of why I like this one, because it's a really different chart because we look at that 50-minute of choppiness for almost a week straight on Aussie dollar. Then we pull up USD CAD. It's a very different chart, right? We see the CAD gaining strength that whole past week, peaking towards that 135.40 level there.
Right, which is a
on
huge move.
Monday.
That's 10 big figures off of 7.5% off of its highs. So a big move down. Is it cheap? 135 still rich Canada going back 10 years. And I don't go back 10 years. I'm just putting context in. I think we live with the markets we have. But it's a great walkthrough. So for you, jobless claims at 7:30, Fed announcement, and you're going to actually listen. I love that. I let the markets tell me what he says. And then the announcement, and then the press conference at 1:30. So action-packed stuff. Some markets more coiled, where I want to see, as you said, I agree with you, see what it does within a relatively confined range. And is this, I think we'll see very clearly, if this causes euro to challenge those recent lows, does it stay there, or are they buying it up by the end of the day? If they do, that means there are certainly dollar sellers out there. If they don't, maybe we see a little bit of sea change. And it's, for me, it's a function of time. If it's bought up, if half that break is bought up by the end of the day, by 3 o'clock, this market isn't going any lower. So lots to work through, lots to do. Well done today. Great to have you on. We are going to get him more spun up. Trust me. It is well worth seeing him. But you have done an incredible job. Thanks so much for being on, Mike. And guys, good luck today. Lots of stuff to do. Stay focused and look for the opportunity. We'll see you back here tomorrow. Have a great day. Thanks.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
All right.